Hi everyone, today let's talk about the debt downgrade once again. Then we'll get into earnings starting with Qualcomm and the ADP Nonfarms. Then we'll get into the charts and finish up with my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So quickly looking at this debt downgrade, we talked about it yesterday, so definitely check out that video if you want a little bit more detail. I'm just going to hit the highlights here. They talk about how the US has a lot of debt compared to all of the other AAA rated nations. He mentioned that debt to GDP ratio is up at 113%, so the US government owes more money than the whole country makes on an annualized basis. And we actually have more debt than most of the AA nations. If you listen to his interview on this article, it'll be linked below. Definitely worth a listen. He also mentions that the government continues to not tackle any of its spending programs, any of the entitlement programs. We continue to spend a lot of money on those, and nobody really wants to take responsibility for fixing them. This includes Medicare, Medicaid, and Social Security. And he did mention that if we started to fix these things and stop running such a massive deficit and maybe tackle that debt to GDP ratio at least a little bit, we don't even really have to pay off the debt to get it down. We just need to grow the GDP without raising the ratio, that we could actually recover the AAA rating, but that's just not what's happening right now. Moving over to Qualcomm earnings, they did not do very well. They're obviously very exposed to the handset chip market, and they expect handsets to continue to decline. They already declined 25% year over year, and the stock was down 6% in extended trading. In terms of top and bottom line, they beat on the bottom, missed on the top just by a little bit, but obviously they are putting out weak guidance because handsets are not necessarily going to sell well over the next year. And it's also worth mentioning that this can definitely affect Apple. If smartphones are not selling the way that they have been, Apple still gets a large percentage of its profits from the iPhone, and this could be a potential indicator of the guidance that Apple is going to put out. Moving over to the ADP Nonfarms, we got another massive blowout on private job sector, 324,000 compared to the estimate of around 175,000. Massive beat, once again, mostly driven by 201,000 in hotels, restaurants, bars, and affiliated businesses. The service industry continues to be the big grower, and it's growing faster than expectation. This is the last sector really to see that growth, and it's starting to come through now. Once this is done, I feel like we'll see more normalized job growth, but it's still pretty aggressive here with the ADP Nonfarms. Moving over to the economic factors, you can see that ADP Nonfarms for today. Looking at tomorrow here, we have global services PMI expected to be positive for the globe, which will be interesting. And then we have non-manufacturing PMI here at 10 o'clock as well. Those will be the big two for tomorrow, as well as initial jobless claims. Moving over to earnings, you can see Qualcomm missing on the top line. Ferrari missed on both. Interesting to see those luxury brands starting to miss. Occidental also missing on both. Philips 66 also missing on the top line. Overall, not terrible. Simon Property beating on the top and bottom line, so there is some luxury brands still doing fairly well. PayPal beating on the top and bottom, also interesting. Looking at tomorrow, this is the big one for the week. Apple and Amazon after hours. We also have ConocoPhillips, Anheuser-Busch. Booking, fairly interesting. And that's really going to round it out for tomorrow. Moving over to Max Payne, you can see it's still sitting here at 454. We're right here at this highest put strike, 450, just slightly above that, and I would expect that to hold, honestly. If these two puts make a little bit of money, that would be interesting, but still a close between 455 and 460 for the end of the week would make sense. Million options here now. Put call ratio still very high at 2.3. You do have a couple of calls out here being sold. I would expect these are options that are being sold because we think the markets have kind of capped out here in the short term. You have the same thing on the put side. People looking for a little bit more sideways action, in my opinion. But again, put wall at 450, definitely something to watch going into the end of the week. Moving over to the charts, starting off with the S&Ps here on the hourly and the daily. You can see we fell throughout the session. Got that continuation from the after hours announcement on the debt downgrade. As we expected, we got bearish price action. paused briefly at my level in the pre-market, rallied to the 200 and then pulled back. We're now in this zone here, 448.74 up to 453. You have that trend line sitting at 451.79, 21 EMA sitting at 452.53. You can see on the daily chart, we are sitting right on top of the 21-day moving average. Big volume, big bearish momentum, and I still expect this to continue to the downside, even if we see a shorter term pullback. Moving over to the NASDAQ, similar thesis, hit that level, bounced close to the 200 on the hourly, and then went straight down. We're now in this zone here, 372.85 up to 376.45, showing a little bit of bullishness after hours. I don't really expect that to make it very high, potentially up into this zone. I would expect these upper levels to hold as resistance and potential areas for shorts to start to enter the markets. You can see that as they're clear resistance areas. You can see that here definitely looks like a lower high setting up, and we're taking out that midpoint now. And if this continues down like I do expect it to, it could be quite dramatic. Looking at the 55 EMA here on the daily chart as a price target, down at 361.91. Moving over to the Russell and the Dow. Russell, pretty resilient in comparison to the others. Still holding in this same zone. Did move lower, but we're back above my level, 195.15 on the after hours. We'll see if that holds into the pre-market tomorrow. Dow got below the level at 353.62, holding that 55 EMA on the 4-hour, 352.29 for that level. Momentum bearish, volume bearish, RSI looks bearish. You're going to be watching this midpoint here as well, sitting basically at that candle break from the 11 o'clock candle. Moving over to Apple and Tesla, similar thesis, both fell throughout the session. We're below all the short-term EMAs and SMAs now, also below my horizontal support. Next support, in my opinion, would be the 144 EMA down at 190.09, right in this previous consolidation. If we get down into that level, big bearish momentum. And you can see this structure starting to break down as well. We did get below the 55 previously, but we had horizontal support just below it, and then we rallied off of that. You could maybe make an argument that there's a level here at 191.84 and try to trade off of that level. That's going back to 7 July on these wicks. Certainly possible, but that looks like a little bit weaker level in my opinion. Tesla also selling off, gap down, very close to that 200 SMA on the 4-hour chart, sitting at 249.67. You can see I added this level here at 255.44, marking this clear bottom. We're right there after hours. If this rejects here tomorrow, that's going to be a big indicator that we're probably going to break that 200 and start to push down to that 232 area. Moving over to AMD and NVDA, we talked about AMD earnings yesterday. Their earnings were pretty good, but their guidance was weak, and it did fall here today. You can see that pop yesterday, touched that level, rejected very strongly. NVIDIA also crashing down to the 144 EMA, sitting at 437. Overall, we are seeing some semiconductor weakness. You can see huge volume on that big bearish candle on AMD. Similarly, big volume here today, especially compared to the last 2 days on NVIDIA, and this looks weak on both of these charts. Moving over to staples and discretionary, as you would expect, staples holding in the zone, not really rallying, but still holding. We're definitely higher than yesterday's close, but we're still in this previous consolidation area. Discretionary collapsing down to the 144 EMA, took out that level. We're actually below that now. Next level for me is 166.78, and then you have the 200 SMA sitting down at 164.23. Looking at transports just for a moment, you can see that inside candle still building on the weekly chart. Big turn down. Didn't hit the 21 yet, or VWAP on the daily chart. Momentum bearish. You can see that cross here. RSI breaking down. Volume not really that big of a pickup. A little bit higher than 2 days ago, but not higher than yesterday. But this weekly setup does look quite bearish. Moving over to breadth, you can see 50-day average following through as you would expect. 200-day average did move bearish, but not as much as you would have expected in my opinion. We'll wait to see the 50-day average hit that 55 EMA sitting at 63.31. Also have a level there at 62.25. This zone is where I would expect to find at least a little bit of support. Maybe this starts to be a midpoint and we see a double top on breadth. That could also be a possibility. But right now this looks super bearish. Momentum and RSI on everything looks weak. Moving over to yields, we see the 10-year continuing to rally aggressively. This is going to push stocks lower in my opinion. We're also starting to see a reversion on the yield curve. 10-year rallying, 2-year holding in the zone. Definitely interesting. We've been waiting for that reversion for a while. Typically, we see the recession after we get the yield curve revert, and we're starting to move in that direction. And if we do get that reversion, then we start to see the recession calls start to come forward, and that could be a big indicator of lower prices to come. Moving over to the dollar, you can see we continue to rally, super aggressive today. Makes sense, people are moving out of equities and back into cash. I kind of expected to see at least somewhat of a rejection off of this level. We saw the rally, expected that to happen, hit the 55, rallied from there. We just haven't seen any kind of pullbacks, and this looks pretty aggressive in my opinion. If this continues, obviously I think equities are going to go lower, and it's certainly possible that this could go higher based on what we've seen previously. We are still very low relative to where we have been on the dollar, and momentum and RSI looks super bullish here on the daily chart. Moving over to JNK and TLT, both of these are absolutely cratering. We're down to that 96.50 level, marking very close to the lows going back to October on TLT. So we had this double bottom. We're right in this midpoint area. That's where I had that level. We touched it now. We're starting to find a little bit of support there, but this still looks super bearish in my opinion. Moving over to the volatility indices. You can see the MOVE index went up a little bit with the TLT moving lower. VIX obviously got a huge gap up and rally with the big move lower. We're definitely in a bullish structure here now. We're topping out in the same area that we were here going back to the beginning of July. If we get a continuation, you would expect this to push up to 1850. Really needs to hold in this zone and then rally now. If it starts to break down, we could see a pullback into this previous consolidation, but everything looks like the VIX is going to go higher. Moving over to my accounts, you can see I obviously took some hits. I had some puts going into the day, and I decided to roll those out and down. We'll see how that plays out. On the Qs, I sold a ton of calls throughout the day. I should get assigned on these 374s. I was trying to get into some short shares, so I'll get those 374s, and then I have a covered put here now out to 377 for $5. So we'll see how that one plays out. All of these other ones are going to expire worthless. Then I have a 378 in tomorrow's session. Small profit there at the end of the session. We did get a little bit of a move up after hours, just up to 375-ish. But again, I think the down move is pretty solidified, and I think we're going to see some lower prices. IWM, I took those positions off and sold a 193 put for 54 cents going out to Friday. I didn't want to be super aggressive here, just looking for that 54 cents on that one put. If we get down to 193 here, I think that's going to be a decent price. And then I have that XOP put at 141. We're basically at my break even, 85 cents down from 141. You can see we're right in that zone. I would like to see a nice little move up on XOP and get out of this position. I'll be watching this one closely. If we see any kind of continuation to the downside, I'll exit that position. Overall, bearish on the Qs, still pretty neutral here on the IWM and oil and gas. Let me know down in the comment section what you think of the Fitch guide talking about the reasons for the debt downgrade, or the forecast from Qualcomm. Is that going to affect Apple and the other phone manufacturers, or is that an isolated thing? Seems kind of hard to believe that would be the case. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.